Boom. All right, ladies and gents, we're going to talk today about the 6 numbers every entrepreneur must know to explode their profits. Let's get this one started. Here we go.
Shut up and sit down.
Look, a business can give you everything you want in life. Prestige, wealth, freedom. It can also take everything away from you. This show is for those who are willing to take that risk. These are the real life stories of entrepreneurs. But before we start, I have one small favor to ask. Please leave a comment. It can be advice, critiques, tips, feedback, or share this with someone because your engagement is the most valuable and most powerful form of social currency. So thank you, and welcome to another episode of Business Bros. Hi, Business Bros. From guiding startups to Inc. 5000 companies and writing international bestsellers on profitability, these go-to experts are turning financial chaos into predictable growth. With decades of experience, they've helped entrepreneurs master their money and scale fearlessly. So let's welcome to the show, Brooke Lively and Pam Meissner. All right, ladies, let's get talking money. Welcome to the program.
Nice to be here.
Thanks for having us on.
Of course. You know what? Normally I do this big screen, but today we're going to do this little triple screen. We're going to keep you guys this way. All right. Let's get this one started. I'm going to start off with Brooke. Tell me a little bit of background about yourself. How'd you meet Pam? How'd you guys get started in this space?
Pam and I actually met through a headhunter. I was looking for a CEO. Oh, yeah. It is much funnier when Pam tells it.
All right, go for it, Pam. Let's tell you. You got all the kudos here.
Oh, yeah, we met online. Brooke was looking for a CFO and to join the team, and I was trying to decide what I wanted to do when I grew up, and that was that hello, and never looked back since.
She had you at hello. She said, "Oh, hi, nice to meet you." What, CFO? Fractional CFO? You mean you can help me with my work? How does that go? Pam, Brooke, what was that like? Okay, I'm sure you've met a lot of people in this space. What set Pam apart? Why work with Pam specifically?
Well, we kept calling her the unicorn because I couldn't understand why she wanted to come work for us. I kept looking at her resume.
Yeah.
And I'm like, she opened the Russian market for Nestle as their CFO.
You mean Nestle Quick?
Uh-huh.
Yes, the corporate entity. Yeah, I was part of a team that opened Russia. Mm-hmm.
I think, why did she want to come work for me? And she had all this incredible experience and had, her last company, she had grown from 5 million to 50 million, which is absolutely the space most of our clients.
Oh no, Brooke.
What?
No, it looks good to me. Keep going. I think her connection is a little slower.
Oh, okay. Her last company, she had grown from 5 million to 50 million, which is exactly where most of our clients sit. So she knew what they were going through. She knew all the challenges they were facing. She knew, where as they're called, the valleys of death, where it's really hard to get to that next level. Mm. So I was just thrilled she talked to me, much less come work for us.
All right. So after Brooke puts a little voodoo spell on Pam and figures out this is how I'm going to get her to come over here and work for us, what did you guys end up doing? What was this company that Pam couldn't resist working for?
Well, we call ourselves CathCap, and we drive profit in small and medium-sized businesses. We are female-led, female-founded, and we just give it to you straight and don't mince words, but we listen really, really well. We're great partners. We're great problem solvers. We just like to think through things with people. And at the end of the day, we let them make the decisions, but they certainly know what our recommendations are.
Brooke, any particular companies that you guys kind of target and go after to help kind of focus in any niches that you're into, or is it pretty broad spectrum?
We started out very niche down in the legal industry. However, over the past, I don't know, 12, 14 years, we really have branched out and we'll do all kinds of things. We've worked with SaaS companies. We've worked with um, medical testing companies. We've worked with, right now, we have a lot of construction companies and wealth management companies. So we're pretty industry agnostic at this point.
For an industry, for a company that is looking to grow, where should they be roughly when they look to work with a company like yours?
It's going to be around $2 million in revenue. It kind of at 2 million, you have the proof of concept, and it's too much for the owner to handle themselves. And when you introduce employees to the mix, it adds a whole nother level of complexity that kind of pushes owners over the edge.
It sure does. I know I've heard a lot of little companies, and they always hit like a plateau. Whether it's, you reach 100 grand and then you're trying to break to that next ceiling, you're trying to reach that first million, then you reach that first million, and for whatever reason you get stuck 1.2, 1.3 maybe, and you can't break that ceiling. I've noticed for me, what ended up happening is I had to find partners that helped me get to that next level. There are things that I was good at, things that they were good at, and then together kind of reach that next level. So it makes sense that at that $2 million marker, you have an established business that has that track record that's ready to go to the next level. What are some things that are holding people back at that level, at that $2 million marker? What are the things that you see normally that are blocking them from hitting that $10 million marker that they're going for?
I think the biggest one, there are a few. I think one of them is control. If anybody has read Traction, you know the phrase letting go of the vine. And as an entrepreneur who has scaled a company, you know every part of that company, you know how everything works, and you have a particular way you want things done, and you tend to really cling on to things. Letting go and letting other people do them, even if they don't do them exactly like you do it, even if they don't do it as well as you do it. Having somebody else do it 80% as well as you do really increases the output of your company, no matter what it is that you do. So letting go is a big problem that we encounter. Learning how to manage people and how to hire the right people and when to hire the right people. So those are the first two that come to my mind. Pam, what about you?
Well, let me ask you, which one of you two is the therapist? Because the entrepreneur that has to let go of control and and somehow accept that their employees are only going to do as 80% as good a job as they can. Which one of you is the one that talks to that CEO and says, "Look, this is the way it's done"?
I think we both do. Yeah. And those are good conversations, because you know what? More times than not, it's not 80%, it's 120%, right? That, doing that delegate and elevate exercise, you realize, I joke with people that there's a line item on the P&L called ego, right? And it's an expense line item, right? And that if you can let go, then oftentimes there's people out there that are actually much better than you are at doing these things. Yeah. And that's humbling, right? It's humbling, but so powerful to propel revenue and profitability.
Now, you guys are definitely on the accounting side, and I titled this show the 6 numbers that every entrepreneur should know. So what are those 6 key numbers that every business owner should be paying attention to, and they need to know? And I know as an entrepreneur, and speaking to so many different entrepreneurs, we get very good at what we do, but we don't always pay attention to the numbers. Do we have KPIs in our head? Maybe, but not necessarily on paper. What should we know?
So They kind of fall into categories. The categories are cash, ideal ratios, production, budget versus actual, marketing and sales, and then some kind of engagement-based KPI. When we talk about cash, for most people, that one number, and when we say number, we mean a number or a report. So for us, it's really that cash flow forecast. How much cash are you going to have at whatever interval is appropriate for you? The smaller your company, the tighter cash is for you, the smaller that increment of time. So for most companies, $1 million and under, they need to know how much cash they're going to have at the end of every week for the next 6 to 10 weeks. Because if you don't know it by week and it's time to run payroll and you don't have the cash, there's nothing you can do. Had you known that 3 weeks ago, you might have been able to move some stuff around.
That statement of cash flow is so important. I mean, that's probably the number one reason why companies go under. It's not necessarily that they're not making money, but oftentimes they don't have it when they need it. They're not understanding the seasonal aspects of their business, or they're not understanding, putting away for taxes, paying their employment taxes. That was one of my biggies when I first got started. I didn't even know who Uncle Sam was or the state of California and why they were taking the money away. But that lesson gets learned really quick, right? Yeah, absolutely. I always tell people, I'm like, if you live in California, you understand the IRS is pretty crazy, but the state of California is gangster, and they'll come after you.
Yes, they are extra. Absolutely. Mm-hmm.
They are.
So if a business is struggling, and of all the metrics that you mentioned right now, which one's that first one? Obviously a statement of cash flows, but it's hard to explain to somebody what a statement of cash flows is if they don't even do things like have a P&L right up front, right? Like,
well, and I actually don't mean a statement of cash flows. I mean a cash flow forecast that really looks at how much cash are you going to have in the bank? Because think about it, week 1 and week 2 in your company, you don't have the same cash outflow. Mm-hmm. Week 1 and week 3 are always the most expensive weeks of the month because you've got payroll. Yeah. And week 1, you have to pay rent if you've got a physical location. Weeks 2 and 4 are a little easier. And whoa, baby, if it's a 5-week month, week 5 is like almost a freebie. Interestingly, your clients don't necessarily like to pay you on week 1 and week 3. Why don't they pay you on week 1 and week 3? They're trying to make their own stinking payroll.
Yeah. Yeah.
Or if you're B2C, if you're direct to client, they're waiting for their paycheck to come in. So, you don't get paid so much in week 1 and week 3. Most businesses, most B2B companies get paid mostly in week 4, which means you've got to kind of float that whole month. So knowing how much cash you have, and it can be as simple as a spreadsheet. I'm going to start the week with $100. My payroll is going to be $35. Okay. I'm pretty sure I'm going to get paid $10. All right. I'm going to end the week with $75. So the next week we're going to start with $75. We're going to get paid $20. We have to pay rent, which is $50. I think we're going to end up with $45. Is that right, Pam? Check my math.
Close enough.
But you get the idea, and you go 6 to 8 weeks out, because then you can really see, because, $50 a month in rent for this company that doesn't have a whole lot of cash is a lot of money. Mm-hmm. And if we can move that from week 1 to week 2, then that's going to have a huge effect on the bank account, and we're not going to be overdrawn.
Yeah, it's going to also release a lot of stress when you know exactly how much money is needed and when you actually need it. Now, there are companies who are suffering because maybe their purchase orders, maybe their vendors are paying out, 30, 90, 60 days
Mhm.
out. When you sit down with a client, is there anything you guys can help them do to kind of reduce that waiting period? Maybe they can get paid, in 30 days instead of waiting 60 days to kind of advance that cash flow. Is there something we do where we're structuring what our out bills or what our out money is going to be to like build up a nest egg? Like how do we approach this stuff? Because there's so many different ways when it comes to attacking a particular strategy in a business. But at the end of the day, they were already kind of struggling when
Mhm.
they called you up. How do we plan that out? How do we form a plan of attack and then execute?
I think one thing I would say that I would never do is factoring of receivables. When we've seen clients come to us and they have factored those, it's a really slippery slope that is really, really hard to get out of. It it depends on how much of a challenge is. We have a whole thing that we go through with clients to help them find the cash. And it kind of goes from easiest to hardest. Hardest at the end of the day is asking family and friends for funds. The time to get a loan, the time to have a line of credit is not when you need it. It's when you
Mhm.
don't need it. And if people could realize that, and a lot of it, we like to do what are called circuit breakers, and we like to establish what will we do when it gets bad, what will we do when it gets worse, and what will we do when it gets awful. And we
Mm.
do that when it's not bad, worse, or awful, right? We do that with clear heads and clear minds. And usually we can get people to understand the choices that they need to make. As much as those circuit breakers help us on the way down, they also help us on the way up, because there's nothing like having good cash flow. And you mentioned seasonal businesses, and we work with a lot of very seasonal businesses. There's nothing worse than having that windfall of cash and not knowing what to do with it.
Mhm.
Right? And you spend it. Oftentimes, I like to tell Brooke, I said, I think they've spent it 3 times again, because oh, I got, $500,000 in. And they're like, I want to do this. I want to do this. I want to hire this person. I want to invest in this part of the business. And oh my goodness, what could we do in marketing with $500,000? And we have to remind them, you have $500,000, not $1.5 million.
Mm.
And so we help them make choices. And it really is hard in the beginning. But on the way up, those are good problems to have. And we do that by helping them understand what the ROI of their choices are. And, that's not always easy or simple for them to do, because people who are entrepreneurs are really good at one thing. And it typically is not math. It's typically
Yeah.
not money. And it's also typically not people. And so we work a lot with those things. And one of the things Brooke is very passionate about is avoiding entrepreneurial poverty. We see that a lot, that they give everything to their business and
Mhm.
they don't take care of themselves. And one of the 6 numbers that we do is, it's called the rule of thirds. We like to see a third go to employees, a third go to overhead, which includes marketing, and a third go to the owner. And the owners need to know that they're more than entitled to that much money. There's no reason to feel guilty about making good money, because you're taking all the risk.
100%. And sadly, there's so many companies, like you said, that don't even pay themselves. They're barely getting by. They're moving forward. One of my mentors said that when he talks to entrepreneurs, he always asks them the same question: how long you've been in business? And they'll say something like, I've been in business for 5 years. And then he'll ask them, have you been repeating the same year of business 5 times, or have you been growing year over year and been in business for 5 years? And that's kind of one of those humbling questions, because you sit back and you're like, nah, I've been in the same spot. I haven't paid myself very much of anything. I'm struggling to get by. My business is kind of growing. I mean, I added an employee here. I got a bigger building here, but they're in the same spot. Why grow a business like that? I remember, like, it's to me, it's like when you scratch a lottery ticket, or you buy a lotto ticket, or you scratch a little scratcher right before you have this idea of, I'm going to buy this house and I'm going to do this with my winnings, and I'm going to go, the same thought process happens when you start a business. And yet when you're in it, you get stuck in the same thing. You don't pay yourself. It's all about your business. It's all about your employees. And I understand that, but I love your breakdown there. A third of it should go to the owners. How, and this is going to be a weird question, but how damaged do companies got to be, or how damaged can a company be to be able to come to you and still be able to save them? Because like you said, they're not good with the numbers. They're not good with the math. Maybe some of them aren't really keeping books very well, or they have books, but they're not really, done right. When a company comes to you, how struggling can they be before you can kind of help turn them around?
Can I take that one, Pam?
Yes, please.
We work with some companies that are struggling, but really the companies that we work with are those entrepreneurs that have a big vision that they want to grow and scale. And that is what we help them do. We help them optimize what they have. So, for instance, I was talking to, she's actually now a former client, because they grew so much that she needed to bring a CFO in-house. But when we started working with her, her profit margin was at about 35%. She is now taking home 60%. So she's not doing 1/3, 1/3, 1/3.
Mm-hmm. Yeah. Don't you want to be in that business?
She's taking 60% to the bottom line. And back to the entrepreneurial poverty thing, one of the things that happens is, you've been repeating that same year 5 times, or you don't take any money and out of the company for 5 years, and you've put everything back and you're just trying to break even. And then you've got a good year. And you're like, thank God.
Yes.
Because I haven't been on vacation. We haven't bought any clothes. I haven't bought a new car. And my car's like a total junker at this point. And, duct tape and bubble gum are holding it together.
Yeah.
And you go out and you spend every stinking penny that you made.
Mm-hmm.
Here's the problem. You didn't keep anything to reinvest in the company.
Nope.
So now you're going to repeat 5 years
Doomed.
of that struggle bus. So, what we come in and do is, as Pam said, put in that discipline to make those good choices. So we want our owners to get paid. Maybe not quite as much as they would like to. I think the client that I talked to this morning, she was making 30, 35%. I mean, don't get me wrong. She wasn't
35% is great.
But she definitely understood that while she could have taken out more, by reinvesting and by spending that money improving her company, 4 years later, she's taking out 60%.
Yes.
And so I don't want people to starve, because when they do starve, they make poor decisions. So the firms that really are in our strength are those ones who see the vision and who are willing to make the hard choices to get there.
Now, scaling, it can be one of the most amazing parts of your business. It could also be one of the most terrifying parts of your business, because all of a sudden, you're trying to get your customers to say yes, and you're trying to do everything you possibly can to make that happen. And then you keep testing and testing and testing. You finally hit the iteration that works. And now all of a sudden everybody's saying yes. And you're like, oh my God, now how do I fill these orders? How do I grow this company? How do I get more? And whatever it is that happens at that point, it can really mess up an entrepreneur, and they can fail at the point of success. When companies are scaling fast, what's the biggest mistake you see over and over again that they make, and how can they avoid it?
Well, that's why we get paid the big bucks. It probably comes down to the concept of planning. And, we spend a lot of time, not only on the cash flow forecasting, which is a form of planning, but also planning that when this happens, we need to do these things. For example, when you get a surge in orders, we already know who we need to hire next, how much we're going to pay them, and how long it takes for us to hire somebody. So it's anticipating even the good problems and running those iterations. One of the things we do that's different than most fractional CFOs is we have a dedicated analyst. Every CFO has a dedicated financial analyst. So we have somebody doing that FP&A, the planning and the analysis work that most small businesses can't afford. But that planning is essential. Now, you never do the plan that you crafted in the beginning, but it absolutely helps you know what are those levers that you can do. Because at the end of the day, you need a stool with 3 legs, right? You have to have strong sales and marketing. Mm-hmm. You have to have strong production, whatever that is, operations. And you have to have strong finance and admin. A business without the strength in those 3 areas is going to fail.
Yep.
And in my experience, you're going to go for sales and marketing first. You're going to go for operations second. And then you're going to go, oh, I have issues in finance and admin. And that's where we step in, is when they get to that point and they have that flywheel turning on the sales and marketing side. They're working the kinks out of the operations side. And now they need to turn to the finance side.
And it's amazing because there are times when we will go to a client and say, we need to turn off some marketing. And they're like, oh, but it's working. Like, it is working. But we've got some operational problems. We don't have the people we need. We don't have the materials we need. We don't have the equipment we need to take care of all those clients. And, that is going to create unhappy clients. It's going to damage the reputation. It's going to cause all kinds of problems. So we need to turn off some of that marketing, fix the problems in operations, and then turn the marketing back on. Because what we don't want to do is keep stuffing clients into a funnel if we can't get the work done. And as Pam said, there are levers to pull. And one of the things that we do, we talk about strategic advice that drives profit. And that's that thing. We can look into the future and we can say, what's going to happen? And when someone comes to us and says, I want to spend that $500,000 on marketing, we say, okay, if we spend $500,000 on marketing, how much new business will that bring in? Mm-hmm. How much capacity do we have in operations or production? Oh, we can't handle that. Okay, great. Who do we have to hire? Who do we have to train? How long will it take us to do that? Okay, now how much will that cost? Because it's going to take us 5 months to onboard all those people. Okay, now how much of that $500,000 that we had earmarked for marketing do we now have to actually use to pay for the production
I guess I'm not getting my Rolls Royce this time around. That's what's happening. You ruined it for me. But no, but what you're talking about here is exactly why you're looking for that entrepreneur, that's that visionary, that one that wants to move forward. Every entrepreneur should read Michael Gerber's E-Myth, and he breaks down that technician, that the entrepreneur. And the manager. And I feel like what you guys are doing here is when I partnered, I partnered with my brother one time to grow an insurance agency, and it worked out really well because I was the one who had the vision of where we wanted to go. And he would always get mad at me because I would give a direction where we were going, and then he does exactly what you're describing. He's done all these SOPs. Okay, so if this happens, this happens. If this happens, this happens. He's very systematic in his thought process. Mm-hmm. And as soon as he lays out the system, I'm like, left turn, we're going in this direction now. And you can see his whole world crumble right in front of him. He's like, damn it, I got to start over again. But having the plan, you're exactly right. Being able to determine exactly where you want to go and what it's going to take to get there, what's going to happen when it goes good and what's going to happen if it doesn't. Those are all things that you need to know in order for your company to really move forward. So,
and having a realistic timeline on it.
Yes.
Because I don't know, as a visionary, I think we can get everything done in, I don't know, Pam, what's my normal timeline? Like 3 weeks?
Yeah.
I think we can get
I don't think you've ever been that generous.
Okay. Yeah. It's usually a week to 10 days. So like, how hard can it be to build a 40-page website? Like, Can't we get that done by the end of the week? I think we can. So, having people there saying, this is what it takes, and back it out and look at it, setting expectations for the visionary and for the rest of the people in the company.
Very early on, the companies will have a CPA or somebody who's handling their books. What's the difference between that for people who aren't clear? Between having that CPA or that tax preparer, that financial advisor that comes in and kind of gives you advice, compared to having that fractional CEO in house that's providing you the advice that you're giving. There you go. All right, go.
Can I take this one?
Yes.
A CPA's job is to maximize expenses and minimize taxes.
100%.
Right?
Yes.
And I have these people that come to me and they're like, I love my accountant. I'm like, why do you love your accountant? I never have to pay taxes. I'm like, let me tell you about a guy I know. Pandemic started. I know him through EO, Entrepreneurs Organization. So at the very least, to be an EO, everyone has to be doing $1 million a year. He was doing multiples of that. And like everybody else during the pandemic, he's like, I need a new house. So he goes out, finds this great house, calls a mortgage broker and says, I need a mortgage for this amount. Mortgage broker says, okay, send me your tax return, send me this, send me that.
Oh, no.
Comes back to him and says, you're the richest poor person I know.
Yes.
He's like, what do you mean? Well, on paper, you don't make any money. Mm-hmm. He's like, I know, isn't it awesome? I don't ever have to pay tax. Uh-huh. And we can't loan you money.
Yeah.
And I have literally gotten in fights with tax accountants saying, I need to pull revenue into this year for business reasons. They're like, no. Let's push more into next year. Can't you just put that check in a drawer somewhere?
Don't cash it until after the 31st.
Until after the 31st. I'm like, no. And they're like, but we're going to have to pay tax on it. And my clients are going, but I'm going to have to pay tax on it. I'm like, Mm-hmm. And we need a $2 million line of credit for you to go out and be able to expand your business. So what do you want to do? You want to pay $30,000 in tax and expand your business? Or do you want to avoid the tax and not expand?
See, that's understanding the rules of the game. I always explain to my students, my high school students, I'm like, remember the first time you played Monopoly? You probably sucked at it. You weren't very good. But the second time you understood the rules to the game and then you had a chance of winning. And I feel this is exactly what understanding the rules to the game means. Just because you're a tax preparer or CPA doesn't mean you understand the rules to the entire game, the way the game is played, because the way you look at a P&L statement and an overall business when you're a tax preparer is completely different from when a lender looks at it. It's completely different from when your CFO is going to look at it. You're all looking at the same numbers with different intentions, trying to accomplish different goals. So there's a completely different structure. So why the fractional CFO? Why should that be involved in my business?
Because the fractional CFO is the one that should be able to look at it from everybody's point of view. They should be able to say, okay, I see what the tax preparer wants to do, and weigh the value of that against this is what the owner wants to do. This is the financing that's going to have to happen. This is what we're going to finance internally. This is how much cash we need to keep. This is what's going to happen in 2 years. This is going to be here. This is going to be there. And then taking all of those plans and synthesizing them into something that probably will not make everybody 100% happy.
Nope.
However, will get that owner to their vision.
And that's the key.
That's the key.
Right.
You asked another question, and I think Brooke took the tax piece of it. The other roles that people don't understand is there's the bookkeeper, right? And the bookkeeper is the minimum finance person you have to have on the team, because they have to record everything so that you can file your taxes. That's the minimum bar, right?
Mm-hmm.
After that, you can add what's called a controller. And that's the person who's looking behind and saying, oh, look, we hit a pothole there. We dodged a bullet there. Amazing performance here, right? But what a CFO does is a CFO sits side by side with the business owner and looks forward. And they speak their vision, and the CFO, like Brooke said, synthesizes it and says, okay, if that's the vision, then let me show you where the barriers are.
Here's the roadmap.
Mm-hmm.
This is what we need to do. We're going straight for 3 miles and turning left.
And that's crucial to, I think, every owner out there. It's, when you bring somebody on like that, they have the same vision that you have. They're going in the same direction that you want to go in. And although they might tell you, sorry, this year you got to pay that 30 grand in taxes, they're doing it because it's moving you still in the direction that you want to go in. They're not doing it because of a tax advantage purpose. They're not doing it. I mean, maybe they are, but their focus is what your goal as an entrepreneur. What is it that you want to accomplish in your business? Where is it that you want it to be? And then you're treading forward together. And I think that's one of the crucial pieces that I think a lot of entrepreneurs miss.
Yeah. And Pam talked about the bookkeeper and the controller and your tax accountant. You need to realize that these people can be very good at their jobs, but don't expect them to do somebody else's job. Do not expect your bookkeeper, whose job it is to keep accurate records. That's their job. Keep accurate records. Basically write down everything that has happened. Don't ask them to draw the map of where you're going. Mm-hmm. Don't ask your tax accountant. Well, for God's sakes, if you ask your tax accountant to do your bookkeeping, it's going to cost you an arm and a leg.
Sure does.
And they do it.
It's going to be like three entries.
Sometimes they can do it. Sometimes they're not even that great at it. Mm-hmm. Don't ask me to be your bookkeeper, Pam. What kind of bookkeeper am I?
Absolutely awful.
I'm horrid. I am not a good bookkeeper. I'm not a good controller. Don't expect these people to do other jobs. They are very distinct skill sets. Let people do what they do.
Yes, and that's what we find in small businesses is that titles are cheap. And so people will call somebody who's a controller a CFO.
Yeah.
But the controller's in the back of the bus, right? If the business is a bus, they're in the back of the bus and the CFO's in the front. But you can't be both places at the same time.
No. And I think a lot of it has to do with just pure ignorance, right? You don't know what you don't know. And you think that a bookkeeper is your tax preparer, and you think that your tax preparer is trying to help your business grow because they're trying to keep more money in your pocket. So, as an entrepreneur, you don't know these different phases or these different parts of your business, which is exactly why you probably need a fractional CFO in your company to help guide you in the direction that you want to go in. So, ladies, if people want to reach out and find out more about what you guys do, maybe they're ready to scale, they're in a position where they're ready to grow, or maybe they just need a fractional CFO to help put them in the proper direction. How can they do that?
Yeah, they can email me at Pam, P-A-M, at cathcap.com and book a call, and we can get started. They can also reach out on LinkedIn to either Brooke or I.
Perfect. Now LinkedIn CATHCAP, CATHCAP is that link on LinkedIn. That handle on LinkedIn. It's kind of confusing when LinkedIn has a link name in it. But yeah, ladies and gentlemen, cathcap.com, fractional CFOs. I promise you there's a big difference between the person who's preparing your taxes and the partner that's going to be there to help guide your vision. That person takes you to a whole new level. Sometimes you didn't even know what that level was going to be. It's kind of like finding a mentor, but in your money space for your business. A good mentor will recommend you a good CFO. And sometimes you might have the capability to put somebody in-house full-time. Most of the times you don't, which is why these fractional CFOs exist. You want to have a conversation with them, step forward, reach out, have that conversation right up front, and then you'll see exactly where it is that you need to go. And both of you will vet each other out. That's kind of the way it works. Just like with fractional CFOs, I believe the same thing with mentors. You have to have the conversation to see if that's what you need. CATHCAP is the website, cathcap.com, CATHCAP.com. Ladies, any final thoughts before we head out? What?
Yes, very rarely do you find the two of us speakless.
Yeah, that was weird.
We covered a whole lot of ground today.
You asked a lot of really good questions.
Thank you. Appreciate it.
And I think, just going back to what you said, there are different jobs, there are different purposes, and, titles are cheap. But vet the people you're working with, whether it's a CFO, a tax accountant, a controller, or a bookkeeper. All of these things deal with money. And most people, that's kind of a hot button issue.
Oh, yeah.
So you need to make sure that you connect with them, that they're easy to talk to, that they're non-judgmental, that they're willing to really partner with you and partner with the other providers in your world. Because, your accountant needs to talk to your CFO and your bookkeeper and these people need to come together and form a team for you. So you want someone who isn't territorial, and you want someone who's not going to judge you, because you're going to have to, as one of my clients once said, he's like, I have to show you my underwear drawer. And I'm like,
yeah.
Dan, what are you talking about? It's like, the underwear that's in the back that kind of has some holes in it and the skid marks you can't get off. And I'm like, turning around, looking at his wife. I'm like, do you need to go shopping for him? And he's like, but I'm like, okay, I'm going with this metaphor. What? He's like, I have to show you all the bad parts in addition to all the good. And I'm like, yeah, you do. That's how we get where we're going.
Yes. And I think it's important to know, we've been around the block a few times, and the things that you might have shame about, there's not much you can do to surprise us. So we're probably just going to meet you where you're at and walk through with you to get to where you want to be.
I promise you, we've seen worse.
Yeah, definitely. And they're not actually going to go through your underwear drawer. So just to let you know right there, they're going to stay away from that for sure. But it might feel like that when they go digging through your numbers. That's for sure.
It is intimate, yes.
It is absolutely
Really is.
intimate. And hopefully, ladies and gentlemen, after you have a conversation with them over at cathcap.com, you realize why Brooke just barely mentioned to Pam that she wanted to work with her, and then Pam just jumped on board, right? You're looking for and hoping for that team. If you can't find that person out there where you just mentioned they want to come diving in and work with you, then definitely go to cathcap.com, because apparently Pam will just go in there and start helping you out right away. I'm just playing. But definitely reach out to the team, find out exactly what they're up to, how they can help your business grow, because at the end of the day, that is your nest egg. You put your blood, sweat, and tears into it, and if you have a vision of growing it, you need to partner with a team that also will parallel your vision and help you get there as well. Ladies, thank you very much for being on the program. That's all we got for you guys today. We'll catch you guys on the next one. Peace. And we're out.
Appreciate it.
It's over. Go home. Is your business in need of marketing? Try starting a podcast, but not just any podcast. Podcast like a pro. We can show you how to take your business from being invisible to becoming a brand people trust. Go to www.businessbros.biz to get started today.